Oil prices are recovering some of the losses sustained over the weekend, but remain well below the $50 mark. The global benchmark Brent crude is currently trading around $49 a barrel. That is over 60% lower than it was just a year ago. The slump is hitting oil-rich Saudi Arabia. The kingdom is selling government debt this Monday, reportedly worth more than $5 billion. Commercial banks will be allowed to join the bid for the first time since 2007. For more on the significance of this move by the Saudi government, let's go to CNN's emerging markets editor, John Defterios. He joins us from Abu Dhabi. And John, I mean, really, when you look at this, this is like the richest person in your neighborhood suddenly going to ask the bank for a loan when we all thought they were swimming in cash. Why are they issuing this debt?
Yeah, it's a fantastic analogy, Maggie. They have a lot of cash, but a lot less than they did this time last year. So it's interesting, the architect of the strategy to hold on to global market share when it comes to oil and drive down prices lower is now needing to plug the holes on its own finances. $5 billion in the domestic market today in Riyadh, and up to $27 billion by the end of 2015. And we have the latest numbers from the Saudi Arabian Monetary Authority suggesting how much cash they do have in terms of foreign exchange reserves, $664 billion. But Maggie, this is the interesting point. Look at the cash burn from August to August, some $72 billion. And they actually came into the strategy with a record $736 billion. But we're almost seeing a perfect storm here. The revenues are down. This is the Saudi strategy. But we have the accession to the throne of King Salman, replacing the passing of King Abdullah, and he's pushed up spending even more in 2015 while prices are going down. Let's take a listen.
One of the key factors for high spending this year is, of course, the succession and the royal handouts that we saw at the beginning of the year. And so that's a one-off that wouldn't be in the books next year. But the critical area is twofold. One is the lower oil price, and the second area is, of course, the high government spending, even before the handouts this year.
Malik and others that I'm talking to in the region, Maggie, are suggesting that the handouts will continue when it comes to housing and schools. There's been a shortage of that sort of infrastructure in Saudi Arabia. There's a lot of domestic pressure to continue. But we'd also keep in mind here that Saudi Arabia is fighting a war to the south of its border with Yemen, spending a lot of money on that, and also one of the key Gulf states providing funding to Egypt. So can it continue that level of spending in 2016 is a big question mark for investors who are buying these bonds right now. And look at the budget deficit to GDP in 2015. The IMF is being conservative, saying it could be 20%. Other sources I speak to say it could be as high as 25% because of all the spending and the drop in revenues that we're seeing this year alone, Maggie.
Right. And, you know, John, we're talking about people seeing this glut in supply continue, and if they're not willing to cut back on some of that spending, where does that leave them in terms of this policy? Are they going to be forced to cut back production to try to stabilize prices?
Well, so far, Saudi Arabia is not blinking. In fact, the energy minister a year ago suggested that they'll never cut production again. That remains to be seen. But right now, we see Saudi Arabia in a toe-to-toe battle with Russia in a big fight for market share in China. And we know that Vladimir Putin signed a 30-year agreement with China, and that is starting to pay dividends. Back in April, for the first time, they beat Saudi Arabia in terms of exports into that Chinese market. And, Maggie, you know that demand in China is starting to drop right now. But at the same time, Russia and Saudi Arabia are both producing over 10 million barrels a day. In fact, Saudi Arabia in July, according to the Middle East Economic Survey, produced 10.6 million. That's a record. OPEC production at a record at 32 million. And the energy subsidies, the amount of money that Saudi Arabia spends on energy right now is staggering. If you go look at the figures, $37 billion a year. And not surprisingly, they subsidize fuel at the pump. Saudi Arabians only pay 16 cents per liter. That's the third lowest price in the world behind Venezuela and Libya. Can they sustain it? We've already seen the UAE change now and go to a more free market and raised fuel prices here by 24%. So we're starting to see the pain endured here because of the drop in energy prices. And Maggie, the word is we're likely going to test 47 on the downside with Brent, would match that low in January. So this correction is by no means over. We'll have to see what the kingdom does after this. It has the most populous economy here and the largest economy, but it's paying a very heavy price today.
Yeah, interesting you bring up the fuel subsidies, John. We know once they're instituted, very, very hard to roll something like that back. I'm sure the accountants would suggest it, but we'll see if they can actually do it. Fascinating stuff, John. Thank you so much for that, John Defterios.